Okay, Forex traders, welcome back to the channel. Hope you guys benefit from our weekly Forex market analysis, Forex trading strategies, and education. So on this particular content, guys, we want to be sharing with you something very exclusive. I want to be sharing with you day trading strategy, right, that I've been developing for some time. I'll be using the pound USD as a reference pair. Now, guys, don't forget this strategy we did share 3 days ago. We did share an exclusive institutional day trading strategy with still using the same pound USD. We shared how we take our trades and how we watch our market. And guys, in that particular content too, we also shared with you our trading system, the MLX IVT trading system, and how we also used the Fibonacci trading tool to get precise entry points, very correct, high probable trade setups and all, just by looking at the market within certain times and taking off the trade regardless. So guys, for this right here, we have the pound USD and on the 15 minutes chart time frame, and we'll be back testing the market from where we stopped. Now guys, remember that content that we shared was on the 19th, right? The content was shared on the 19th, and we also shared an insight for where we expect the market to dive next on the 20th. So in this exclusive content, guys, we'll be looking at all that parameters. Okay, so guys, remember, for this particular strategy that we've been developing, trading, and also sharing with you guys, what we take cognizance of, right, is the market structure, which in that content we shared what we look at, the parameters we actually look at now. And over time, we'll be sharing the same things with you guys. We'll be looking at the market, the same live market. We'll be sharing these concepts and ideals just to help forex traders out there to trade and make money with it. Okay, so if you like the idea, guys, don't forget to stay tuned to the channel. Don't forget to subscribe. Don't forget to like and then share your thoughts in the comment section as we trade forex with Millionaire Logistics. Okay, so this is the pound USD 15 minutes chart time frame. I want to show you exactly what we looked at for the previous week. Okay, the previous week we did backtest all of this. And at this point right here, where we have this market, this for the 20th. Okay, so we'll be using this just to mark up. So what do we term as what? A market structure. Now, when we have this kind of swing right here, this can be seen as what? A downward move from this point right here to this point as a downward move, right? Now, if we look at where the market is coming from, let me take this off. Let me clean this. First off, within this day right here, first off, we want to consider within this price sample right here, we're just going to be looking at very simple parameters first, just to understand what market structure is, right? Just to understand what market structure is. Now, within this price sample here, what can we see? This right here is a down move. We have price fall from this point right here to this particular point, and then price starts making its way to the upside. Now, one thing we want to take note of is, yes, this was a downward move, having price move from a high here, a high at this point, and we have price come to this low. So we have a high here first, right? Regardless of where the price was coming from, we have a high here and we also have a low here. Now, when this price made this move, right, this move right here, move to this point, right, and come down to this point, and then move up to this point, how can we explain this market? Now we have a low here. Now, structure wise, we can say this price has gone to a high at this point, right? Because this price point here is definitely higher than this price point here. So we have here to be what? We have here now to be what? A higher high, right? Because this market is moving from this point to this point. Now we're considering this actual price right here. Okay, now when this price comes downward to this point right here. We have what? A point here that is what? Lower than this particular point, right? But then it is what? Higher than this particular price point. So we can see within this price sample here, we can see here to be what? A higher low. Why? Because this price point here, the higher low, is what? Is higher than this previous low. And obviously we have what? We have price move up to this point, right? And what can we now see? We can see this price now, this high here. Definitely this price point is what? Is higher, what? Is higher than this, and also higher than this particular price point. So we have what? A higher high that is higher than what? This previous high. And then we see price come down again to this point, right? And at this price point here, we can see that this is a lower price. But then what do we have here? We have what? A price that is what? Lower than this particular price, but then higher than the previous low. So what? We have what? Another what? Another higher low. Why? This low here is higher than what? This low, which is higher than this, the base low, which we have here, right? So we've actually seen that we've established that this price is moving in this manner. So from this higher low now, from this point to this point, we can just simply look at the price that it's making what? Higher highs from this low, higher highs, higher lows, higher highs, higher lows. And with expectation what? That this price is going to what? Go to the higher point. Now we could be assuming that this price may make a higher high to this point, make a high that is higher than what? This previous high. A higher high. I'm not very good with drawings, so just forgive me, okay? But this is what we've been able to establish. So from this higher low, we can, well, risk that price will go to the high side if we see this market at this point. So we can take this risk, and perhaps we would have made some profit off this point and all. But then let's take this off and look at the chart again. Now, one thing I like to consider from this price sample is this. Seeing that this price, there was a rapid downside move, and originally, guys, if you have been following our content, we've established the fact that the pound USD on the from the higher time perspective and all has been in a downtrend. So with that in mind, guys, with that in mind, we won't just be entering this particular price blindly. We won't be looking at the market just blindly, right? So this is where we're okay. But so what we try to establish here, this is the price point, is because we have this kind of move here, we're expecting price to at least move to the upside. So to just make things simple, we use our Fibonacci tool from this point to this point, right, where we have all these moves. And if we look very well, we can see that price was stopped at a sensitive level, or on the average, a price level that's quite important, right? We see price first of all hitting where the 38.0 fib level, and then you see price coming to form this this higher low here, and actually going here to meet the 50 fib level, right? And went straight to the 61.8 fib level, came down, and then makes its move to this other point, right? Which is very much easy to relate to and understand. Okay, so let's look at the previous things where we actually stopped the market. So basically, for the short things, guys, things I want to put into consideration when looking at the price chart from this dimension. Yes, I'm expecting the market to actually fall lower from this point, which we're going to establish on the chart right here. Okay, now I use reference from the previous day price sample like this. I just use my Fibonacci tool to draw here from where the highest point from the previous day to the lowest point of it. Now that's the first reference, guys. Okay, now on the next day, let me see, this is the price data. This is where I see the market from, right? And on the next day here, you see the price here on the 19th, right? And then at this point, with everything that we've actually looked at, we're expecting what the price all here will be what the Tokyo section, right? Tokyo section. And then if we look at the chart, this is where the London section must have started. Okay, this is where the London section must have started. Now I see price work. At this point now, definitely I'll be expecting price to, from the 38 level, seeing that it's falling, I'll be expecting price to come to the downside again. And this would fetch me some profit here. Remember, there must have been a move toward this upside here. Let's not forget. Price made this move, this move, this move, this move, swings, and this move, right? So optimally price is coming down to this particular point. Now breaking and closing below this 38 level here, 38.0 level, we have a sensitive time. Also remember guys that we're also using time to trade the market. The time we find the market and all to trade the market. So time is also a thing of essence. The trading session, guys. And remember we have 3 trading sessions, basic trading sessions, the Tokyo section, the London section, and the New York section. So within the price sample, the time frame, we find this section. We find here to be what? 10. Around here to be 10, which is where the beginning of the London session. And within here, we can risk and put a stop loss somewhere around here, right? That price will trade within this particular range. And we must have made this profit before the price starts moving to the upside. Now, we'll come to the business of the day, right? Just this is actually to confirm with the analysis we shared on the pound USD, followed with strategy and education, right? Okay, so looking at this price sample now, what can we deduce? Okay, now at this point we'll have some other sensitive time, maybe the New York session that we may want to trade, which will definitely start somewhere around here. This is 15:00, which is 1 p.m. and you see price now trying to, from this point right here, this will be a demand zone within this range, within this price range here, and we find this movement. You see this particular movement is the trigger. It's fine, green candles, green candles, green candles to the upside. So we can as well see how this price reacts very much to the upside, right? Seeing that this is 15:00 and we have actually seen this move to the upside down here, around here, and within this time frame we see price was coming further, forming that same particular structure that we found somewhere around here. Price comes to the downside, yes. Now price comes to the upside, forming what? Now price is showing this sign of going up, and price comes down. We find what? We find a low here, a low. We find a high somewhere around here, and we find this particular price movement that is what? Higher than this low. So we have what? A higher low somewhere around here, with the expectation that within this time frame, within the New York trading time, we can expect this move for the price to make a higher high, higher than this previous high. And that's exactly what happened here, and price continued in that manner until price met this particular reference point here. You can see this reference, this zone that we actually drew here. Price met a resistance zone around the 79.0, which is what? A deep level retracement, and then automatically the price started coming to the downside, reacting to what? This zone that has been created here, this massive drop in price. This massive drop in price has come to fill here and is actually going in the preferred direction, okay, which is to the downside. Now in our follow-up content, guys, which is exclusively going to be a 1-hour content where we'll do the same thing that we've done previously, showing exactly how the strategy works in a forward tested market, and we'll be trading that, of course. Okay, now if we actually look at this, you can see the dynamics from the previous zone right to the bottom side. You can see how it reacts and how our tool actually works well to help you make profits from the market. So guys, don't forget that we're giving out this tool for free, the MLX IVT and the Fibonacci trading strategy, which you all are familiar with. And we'll be giving out the tool with the trading sections indicator, all exclusive to the Millionaire Logistics training channel, Millionaire Logistics FX. Okay, so let's do some very simple things here. From the time where we check this market, this should be on the 20th. Remember, we shared our previous analysis on the 19th, okay? So the last content rather on the 19th, where we shared the education strategy and all. So, and right there, the market was somewhere around here, and we forecasted it that it was going to come to the downside anytime soon, that we're expecting the price to come to the downside, right, before it starts finding its way to wherever it wants to go to. But right here, you can see that it broke the structure and continued to the downside. So we're going to be sharing the exclusive 1 hour content. We'll be taking extracts of the previous content where we shared that particular concept, idea, and analysis, and we'll also be looking at the future in respect to our trading. Okay, now from this particular point where the market is now, the same thing right here on the day. Same thing right here in the day, the market is coming down. You can see very much that at this point the market started bearish, came down to this particular point here. Let me draw it. Came down to this particular point here, and it went up, forming what? This is a high. This is what? This is a high. Let's say it's a high, and it formed another high that is what? That is lower than this previous high. So here becomes a lower high, right? And the market right here within the London trading section, you can see how we tapped into this particular zone here, which will be highlighted, the SMC, which will be highlighted by our trading tool here that you will also have. And within that section, you can see how when price made this lower high, it actually respected, it came down, broke these two structures. You can see how price reacted within this London section. Within the London section here, it went to the upside, formed another lower high, right? Another lower high, which is lower than the previous one. And see how within the New York section the price fell to the downside. Right now, that's exactly how it worked. Now, if we also look to this side, you can see that we can reference this zone to this particular zone, right? And see how this market, let me remove, there's something I'm seeing here, let me remove it so it doesn't, okay. Just by using the Fibonacci tool, see how it's easy. Using this, and before the London section, which we have here on the previous day, since price still dropped to the downside, didn't go up, we can adjust this to here, right, before the London section, and we'll have a reference point. Now, if you look at the London section, you can see how price went where price within the London section resisted at what, the 38.0 fib level, and where it came down to the base, right? Within the London section, which is 10 a.m., you can see how price rejected what, the 38.0 level, and then all here you can see how it came down to this particular point, and even here, though I did not trade this, I let this market go, but this was where I took a very cool move from the market this day, being today, right? This day here being today, I actually got a very fine move off the market. Now, this was exactly what I did. Okay, now looking at the market, we've seen this move from here to here. So I used this particular day price action, and then I had my fib level just right here, because I was looking at the day before what the market structure, where the market is before the opening of the London section, and these were exactly the same parameters I looked at. I was expecting the market to react at either this point, or this particular point. Now, seeing this move here and having this reference, seeing this big move right here, which I did not take, seeing this big move right here, and as the market opened in Tokyo section, I was virtually not looking at the market at this point. I spotted the market somewhere around here. This was where I saw the market, and I saw this move and this particular indicator here. You know, it appeared very clear on the chart, and I simply used my Fibonacci tool to have this first reference to where the peak, the beginning of the market. Why? If I had used this, if I put it here, that's the lowest point of the previous day, you know, I would have seen this, that market actually opened below here and was actually stocking somewhere around here and more. But this price has to be accounted for. this price here has to be accounted for. Okay, so with that in mind, guys, I simply adjusted my Fibonacci tool from the high of the previous day and of course to the lowest point before the London session, which is just here. Okay, and then the London session started and I saw these clear remarks here. Now I have the option of taking my trade from here to at least here. This was exactly what I did. In fact, I extended mine to 50 and I was able to make I made 70 pips off this market on today, being Thursday. Okay, and after then, at this point, guys, I left the market. I didn't do any other thing. I watched this move practically play out, but I didn't take it, this particular move. Now, these were the exact parameters I put. I will be rounding up in a jiffy because I don't want this content to be over, to be long. Okay, just it's actually a short one. But we'll be doing a follow up on the next content, which is going to be exclusive on where the previous content and analysis on the pound USD, and then we'll be basically sharing this into very effective and those simple explanations, and still using the live chat. But then we'll be doing something very exclusive, just like the previous contents that I've been sharing. Okay, still based on this strategy, we'll foretest it and explain even other parameters in details. So I hope you don't miss that as it comes. You can as well have your reminder on and check the channel so you don't get to miss out on that. But for this particular move, you can see that we have this same bullish candles to the upside and all. So this is the exact thing I look at, just to the end of it. That's all. I don't do much. Okay, now to the end of this move, and you can have this kind of concept, and I wait for the time. Now within here, you can see that all here were within the London session, right? We want to start trading from the New York session, and when the New York session opens, we have this drop in price. This is the reference. Okay, this drop in price. Now remember, this is what we did with Fibonacci. From the origin of this price, the origin of this all bullish move, to the end of it, and this is where we have the end of it, right? And we see price retracing toward the 38 fib level, though we see price closing below it, right? But it went to this point, right, and it did not close above the 0 level, which is the base. So we have this range here and this range. So we want to see price come into a level. That's just all. We want to see price come into a level. And the price from this point at the beginning of the New York session, you can see very much here how price from this zone, which typically you're going to see on the chart, and you see how price at the beginning of the New York session, which is somewhere around here, how price tapped into this zone, the New York session, and then price made this fall to where? Price made this fall to a deep retracement level, which is the 79.0, but I didn't take this trade. So mostly you can trade counter trends and in the direction of the trend if you like, depending, using this time window, right? The trading session, which I just call time, right? Using that time parameter, using the Fibonacci tool, and having in mind that we're applying this on the pound USD because it's a major pair, and the pound USD involves two different countries, where the London, Britain, and what the US economy, and we're USA rather, and we're using this time USA with reference to New York. Okay, and we're trading between the most active sessions when the London businesses, London Stock Exchange is very much open and active, and then at the same time we're also taking advantage of the New York Stock Exchange market, very much available for trading. Okay, now we see market reacting very aggressively from the 79 fib level, which is a very important one, and you see price reacting again. So just by this move you have up to 50 pips to this upside. That's if you want to catch the retracement. However, most times I just target the market at this time here. I trade the retracement sometimes, right, just for reference. So guys, this is not the full content, but if you like this idea, then you have to wait for the very much exclusive content, maybe over the weekend or close. We'll be bringing that to you. So don't forget, guys, to stay tuned to the Millionaire Logistics channel so you get more of this. And don't forget to hit the like button. Don't forget to subscribe to the channel if you love the idea. and don't forget to leave your thoughts in the comment section. So till we meet again in the next section, Millionaire Logistics. Take care.